Hello everybody, welcome to TraderMerlin Show. It is hump day, it's Wednesday. Hope you enjoyed your Taco Tuesday. Now we're in the midweek home stretch for this wonderful week here in January. We're going to do something a little bit different. Normally we're bringing up charts and talking about specific markets, whether options, futures, crypto, whatever. Today we're going to do things slightly different. As you progress through your trading career, one of the common, I'm gonna look really white today, don't I? No, it's my camera makes me look, every time I reset it, boy, I look pale as can be. It's a ghost show today, everybody, like that. When you start on your trading journey, you realize that the biggest challenge we have is not the market, it's actually ourselves. So one of the things I learned early on, fortunately for me with my mentor, was, hey, listen, you need to really understand personal psychology and kind of how to deal with these issues when they arise. And many of you may not think that you have any issues, right? You're impenetrable, you are invincible, and the markets just are there for your taking. Well, you got to be real careful there, because if you go down that slippery slope, all of a sudden you can find yourself in a world of financial pain, if you will. So we're going to, as I try to clean up my camera here, we're going to talk about trading psychology today. As you can see here, we've got trading psychology with Dr. Woody Johnson, and I will actually move this over a little bit so it's not cut off. And there we go. So we have Dr. Woody Johnson in the program, who has not been on the program for quite some time, but hopefully we'll get him back more regularly this year. Doc, how you doing, my friend?
I'm doing fantastic, Merlin. As always, it's a pleasure to be with you, and I'm looking forward to doing some regular sessions with you.
Yeah, let's do it, man. There's always so much to talk about. I think the beauty about psychology is there's never a shortage of topics to discuss. So as we dive into that, tell me a little bit about what you've been up to, where you've been, what's new in your world, and I'll try to dial in my camera as you go through it.
Yeah, well, as we know, there's this thing called COVID. And if you haven't been living under a rock, then you know what's happening. And it sent me hurling back into clinical work. I've been so busy. I've been busier than a one-armed paper hanger, man. And the thing is that it's not stopping. People are really, especially with this new wave, people are really anxious and very afraid, and they have reason to be. But we are not going to let that daunt us, are we? We're going to be going full steam ahead. We're going to have some apply some discipline and make some money. Now, if you're not applying discipline, you're going to be losing a lot of money.
Yeah, let's go to the losing part of it, because I think, as I mentioned at the very beginning, the vast majority of trading is psychology. If you look at most of the experts in the industry as traders, they will tell you, look, trading is about 80 to 85% psychology, which is a tough one for me to figure out. But the more I do it, the more I realize I personally think it's closer to 100% psychology. So let's talk about some of the things that, because you've done this for many years, you've worked with hundreds and hundreds of traders. I know you've worked for many different firms, et cetera. But what are some of the big obstacles that you've had to help people overcome, and how do you do that?
Well, and it's a great question, bro. One of the biggest things that obstacles they have to overcome is, and this is kind of trite, but I'll explain more, themselves. Now, they got to get out of their way. What I mean by that is, when you're in a trade, and a simple trade, I'll give you a story. A while back, I discovered scalping. Yeah, right, discovered, right? Mm-hmm. Anyway, I started scalping. I put in a huge size. I would take and identify a stock or an ETF or something like that that's going to bump, and sure enough, it will either bump or it would crash a little bit. Either way, and as long as I made the right choice of which direction, I'd do well. As long as I kept my rules and had a stop in and only went for the bump and got out. So if you would you be happy with making 800 to 1,000 a day?
Yeah, sure, absolutely.
And the thing is, I had $800 going to make a day. I hit the 800, and then I'd stay in.
Yeah,
I'd violate the rule, or I would not. I'd go in. I said, I'm going to hit this bump, and I'm going to. I don't need to stop. Crazy stuff, man. And I ended up. So I'd make if I only had followed the rule. In fact, sometimes I did well. I followed the rule for a week or so, and my bank account would be smiling. And then I'd not follow it for like a month, and I'd be homeless or something. Mm-hmm. But anyway, the point is that it's the little stuff, Merlin. It's not the big things. It's not the big trade. It's like when Pete Rose went to the plate, he went for a hit every time. I don't think he ever went for the rafters. That's another one too. Putting on a lot of sides and wanting to think that you're going to make some big money with a big hit, and it's about one hit at a time. It's about making sure that you're taking care of the details, and it's about the tiny things that matter.
You mentioned a lot of good stuff in there, but like for me, when I'm in that situation, and there's been many times where, just as you pointed out, you're in a trade and you're like, okay, I'm going from here to here, right? Whatever. I'm making $1 per share, and I got 1,000 shares, so I'm looking for $1,000, and that greed steps in, and all of a sudden it gets to your target, and you're like, you know what? Not only am I not going to get out here, but I'm going to buy more because this thing's really going to rip. And next thing you know, it drops, and you end up taking a big loser on the trade. That is, again, is your psychological demon waking up, sitting on your shoulder, and trying to manipulate who you are and how you trade. And I'm a victim of this, guys. I was manipulated by my psychological demon many, many times. And I guess you have to come up with a mechanism. And this is what Dr. Woody Johnson is so great at, is coming up with processes to help you, I guess, address problems. And one of the things that I've done through some psychology in the past is I make a list of all of the really bad trades I've made. So if I have a trade where I lose, $300, that's fine. That's no big deal. That's within my plan. But if I have one that is like, let's say it's a $5,000 loser, that's way outside the norms of what I'm accepting in my trading plan. So I write those down. And what's interesting is you can break it apart and find out all the things that really were a violation. So again, if I lost $5,000, I lost too much money, but why did you lose too much money? Was I too big a share size? Did I violate a stop loss? Did I add to losing positions? Was I trading something too volatile? And those, once you start to dig into it, you can really see where your personal weaknesses are. I can tell you this, Woody, many times I've talked to other traders and I see their problems, but they're not mine. Everybody has their own specific set of problems that's unique to them, and they have to find out what they are.
Yeah, that's right. That's right. And the thing is, when you find out, you can't change what you can't face, and you can't face what you don't know. So a lot of this process is about becoming aware. And it's hard to become aware if you're bifurcated in your attention, meaning that if you are in the future worried about what might happen, or if you're in the past ruminating about what already has happened. You can't change anything that you've already done. It's stick a fork in it, it's done, it's put a bow on it. And the future is not here. The only moment that matters is this one.
Right.
And this is the only moment that you can do something in. Now, that goes a little bit further. Once you aim to be in the moment all the time, of course, that's not going to happen. But at least if you can do it some of the time, that's at least going to put you in a better position to make good choices because you've got all of your resources available to you. And because if you're not in the moment, it's very difficult to be aligned in body, mind, and emotions because you're bifurcated. But if you are aligned, then you can go in the same direction. And some people might say, what do you mean the same direction? Well, what I mean is that we can often become conflicted, and some people live in conflict. They can't make a decision about what to order for dinner. And that type of conflict in your head is going to create confusion, and the confusion is going to have you second guessing, and then you're down that rabbit hole, and you're violating other rules as well. So part of the point is to bring your highest and best trader in the service of your bring your highest and best self in the service of your highest and best trader. Because you want to have all these resources available, but you've got to pay attention and you've got to follow the rules. If you're not following the rules, all this stuff we're talking about is not going to matter.
Right. You won't develop any semblance of consistency. And it's funny because Margaret asked, says, so why did you not follow your rules? What was the problem? And Margaret, and I'm assuming you're in this position, but everybody has their own different ways of dealing with it. But I would say everybody has their set of rules, but not everybody can follow those. And if you can follow yours to the T, Margaret, then you're doing better than most, because the vast majority of people, and you have to be honest with yourselves, you will set a set of rules for yourself and not follow them. Every now and again you break it, and when you break it, it costs you a ton of money. So the challenge is, again, how do you deal with that inner demon that tells you to, just violate the stop loss. Just do 10 more cents, you'd be okay, or double down on this position, or revenge trade that biotech stock which took 50% of your portfolio. Those are the challenges that we have to overcome, because yes, you can write a set of rules down in front of you, right? Just follow them. It seems easy, but when you have real money on the line, the emotions creep in, and all of a sudden things can go haywire real quick.
Absolutely. In fact, is it Margaret we're talking to?
Yep.
Margaret, the thing is that new traders, or traders that haven't been trading that long, think that they'll ask the question, well, why didn't you follow your rules? That's what you do. Well, why didn't you, not you personally, Margaret, but why didn't the person push away from the table when they had enough to eat? Or why did the individual not keep up with their workout program? Or why did the person who has the children to pick up at the school, and they knew they should be a little early because of traffic, why didn't they do that? The whys have to do with parts of us that have momentum around wanting something extra. That's what I meant by the conflict. So you got part of you that says, hey, listen, take this trade and make sure that you do your rules. And the other thing is saying, oh, come on, we can make money. We can do this, we can do that. Well, that's either driven by fear or greed or doubt or any of those other things that get in the way. They create barriers and obstacles in the way of follow through. And follow through is one of the most important things you'll ever do. Now, here's another concept as well. People say, we just had Dr. Martin Luther King birthday the other day that we celebrated. And, you'd have this saying in the Black community, a lot of people, it was around when I was coming up, it was keep your eyes on the prize. Well, some people construe that as the prize is the outcome, it's the result, it's the profit. Ladies and gentlemen, that is not the prize. The prize is your standard of doing things, whether you have a standard that's ho-hum or whether you have a standard of excellence. It's about the process. It's not about the outcome. If you're focused on the outcome, then you have compromised your attention. You have reduced the amount of attention that you have to put on the task at hand. Now, the prize is the task at hand. If you are doing things in a way that is following your strategy, then you're going to, whatever percentage that strategy usually gives, then you're going to get that percentage. But if you're not, it's going to implode. So the important thing to do is to make sure that you are aligned, meaning that take a little meditation time out to get yourself centered, grounded, and focused so that you can identify what needs to be done and then do it.
Yeah.
And the second thing is let the profit go. It's not about the profit in any particular trade. Of course, you say, what are you talking about? Yes, profit is why we trade, but it's not about the profit in any particular trade. It's all about the process. Right.
I grew up a baseball fan, and I played baseball as a kid. Loved baseball. Not so much anymore. I'm more of an NFL fan. But I think there's an analogy that I like to use, which is, you look at, again, somebody like Derek Jeter, who over the course of his career batted .315. That means he failed 68.5% of the time hitting the ball. I guarantee you, he never went to the plate, not one time going, I have to hit a home run. Never. It was always, right. I just need to put the ball in play. And if I can get to first base, then I can do what's right for my team, which is earn some runs. And he also didn't say, I'm worried about this pitch or this pitcher. It was like saying, this journey as a baseball player is about getting to the World Series. It's the summation of 160 plus games that they have to play, and they're not going to win them all. They're going to have some blowouts where they get absolutely decimated. They're going to have some other games where they just absolutely destroy their opponents, and all of it becomes almost irrelevant if it's slowly building up towards your end goal. And that's why, we talk about the trading plan, setting your objectives, what are the things you're trying to achieve, and finding a reasonable, low risk way to achieve those. And there's a great comment here that was put in by Believable Direction. He says, I lose money when I think about how much money I need for the house payment, credit card payments, and revenge trade. And you have to understand yourself, what you can do, and what rules you can follow. I absolutely nailed it. I think you're spot on there, Believable Direction, because some of us won't be able to follow certain rules. It's in our DNA, and those are the ones that have to work a little bit more to help fix those problems. Would you agree, Doc?
Absolutely. And the thing is, you've got to be able to identify you alluded to this earlier. I'll just say it again, but you've got to be able to identify what your issues are. That means you've got to use some self-reflection, some introspection, go down into that deep abyss called you, and find out what keeps coming up in your way. And one of the ways you want to do that is to identify your strategy by looking at what you both are drawn to in terms of plans and strategy, and also which ones are, especially for you newbies out there, the ones that are easy to execute. Iron condors and all that kind of stuff. Just stay away from that for now, at least in my opinion. You want to do something clean and that is straightforward. That reduces the amount of resistance you're going to have in the process.
Mm-hmm.
So find out about yourself, identify what things you are most easily drawn away from or to, and what things that you're easily taken on the road to not doing well, because these are things. In other words, if you are really, that you become greedy as soon as, that's me, as soon as you start to make a couple of bucks, then put in place some different tools at the time. Put this in your actual plan. Put in tools that you can use to assuage that tendency.
Mm-hmm.
Tools like putting a tool like tapping, which is just it's an acupuncture type of tool where you tap on different places on the face and your body, and it helps you remain focused. Tools like I mentioned a little earlier around being mindful.
Mm-hmm.
Meditation is going to help. Tools that shift your state of being to go from being frazzled and frustrated to being centered and grounded.
I'll throw a weird one out there for everybody. One of the tools that I use is music. And I think that, we find certain music that keeps us focused and keeps us calm. My mother used to always just pound on my bedroom door, turn off that music, you're supposed to be studying, that's not helping you. And I'm going, it's actually helping me, right? I'm focusing, it's keeping me from going off those rabbit holes of thought that I usually go to when I was studying. And when I'm trading, it's the same way. I need something that's got a good cadence. So I like to listen to house music when I'm trading, and I don't like to have anything with lyrics because I don't want to be singing along or distracted or whatever story they're trying to tell. Just give me some nice, techno or house beat. And that's one of the tools that I use to help keep me focused in what I need to be doing, because I know we've got a lot of people here with married, got kids, then all of a sudden those are big distractions that, you're going to have to work on, because it'll derail you very quickly if you're trying to focus on your trading.
Exactly. And the thing is, when you look at your tools, keep them handy. Keep both your rules and your tools in a place where you can get them. Now, of course, these are mental tools or emotional tools, but still, a tool is not going to help you guys if you don't remember that you have it, or if you can't remember how to use it. So you've got to get tools music is really easy because you just put that on.
Yep.
And some of the others, mindfulness and something like that. But the thing is, whatever the tool is you're using, have it, put it, like I said, in your daily plan. Put it in there. For instance, you've got a stop loss always in your plan, I hope.
Yeah,
and
hopefully.
Hopefully, maybe you're doing a bracket trade where you got everything set up. And here's the thing. in those movements, you want to also have uh, this, put the tool down and put it in the plan so that when you get to that point in the trade, as you're managing, you'll, whether it's take some off or whatever part of your plan is operable at that time, then have the tool ready for you to go to right then.
Yeah. Absolutely. And, one of the things that Dr. Woody Johnson has talked about so many times on not just this show, but on the TraderMerlin or on Power Trading Radio has been, the concept of journaling. And you guys have heard me pound that one extensively. Make sure you're journaling. And it's not just your trade journal. A lot of times it's, how am I feeling at that certain moment in time? Was there something that distracted me? If you have a really big down day, you can probably track it back to or having something to do with your emotional state, right? You not being in the right frame of mind. So journaling is another good one that will help you as a tool to help you get out of these holes. I'm going to read a question here from Jackie so we can get through. I have 2 listener questions I want to make sure we get to. Jackie says, I have a very tough time holding on during drawdowns. I end up just shaking myself out and watching the trade go in the direction that I felt it was going to go in the first place. Of course, that leaves a lot of psychological junk on my plate. Any tips for staying calm during the drawdown period or for a risk-averse person?
Absolutely. And some of the things we've already mentioned are good. Things like tapping and just Google tapping, and you'll get the process. Another one is to shift your state by using visualization. Visualization is a very powerful medium. And when you visualize where you want to be in terms of your physiology, in terms of your ability to focus on what matters most, then see that in your mind, get a symbol for it, and have that symbol be a catalyst for you to do what is in your best interest at that time. Because drawdowns are tough. Right? I mean, nobody, of course, likes them, and they can really decimate your portfolio, and I've had mine decimated by that type of thing. So, but just know that drawdowns are going to happen. So part of the issue is not to make it a big deal, not unless you are, putting too much size on. Then you might need to go see me or somebody like that. But have your plan in place so that you are able to follow it, and using the state shifting of having symbols of yourself and how you're going to look as you're doing as you trading. And what that kind of looks like is that you you take this situation, make a picture of yourself doing it well, following through, being in the now, maybe smiling at the end because you're looking at good results. And every time that you get to that situation, bring that picture up. It's called an internal representation. It's part of neuro-linguistic programming. And in that neuro-linguistic programming, what you're doing is you're changing the meaning of that situation. When you change the meaning, you change your emotional relationship to it. So you can go from being frazzled and frustrated to being centered and grounded. Mm-hmm. And as you remain centered and grounded, you're able to focus on what matters most. Not just what matters, but what matters most in that process.
It's interesting. A few people have mentioned, that they bet that Jackie here is trading too big. And just by the last comment, I don't think so. She says, any tips for staying calm during the drawdown period for a risk-averse person? So my assumption would be that she's not trading too big a share size. What I would say is that there's a couple things, and I love what Doc is explaining and kind of digging deeper into it. But I think there's a real higher level here that's even simpler, which is, what was your trade plan in the first place, right? So what Jackie's going through is something that every single person here will go through. You're going to open up a trade, you bought it whatever at $10 or $20 a share, and you're like, it's going to go up and make a bunch of money, and then it drifts down and it takes you out. And then all of a sudden, it seems like you're literally the last person that got taken out, and it rips up. It's just the nature of the beast, right? So my question for Jackie is, when you open these trades, do you have a defined trade plan in place? Meaning, when you open a trade anytime, you should say, okay, I'm risking whatever, $200 in this trade. Here's where my stop loss is going to be. If that's the case, then that $200 number or whatever number it is that you're defining for yourself shouldn't be a psychological burden, right? Now, if you're getting stopped out 9 out of 10 trades, now that should be a psychological burden, right? You got to figure out exactly why that stop loss is not appropriate. But if you are a normal trader, you got your risk reward ratio is all established and you got your stop losses in place, you shouldn't be getting to that point where the drawdowns are gut wrenching and nerve wracking and psychologically damaging, right? It should be like Derek Jeter, just striking out. Okay, I come to the plate next time, no big deal. So maybe you are trading too big. My guess is you probably have your stop losses much too wide, or you're arbitrarily selecting your stop losses where you're down a certain amount, you just throw your arms up and say, okay, I'm just getting out. Well, that doesn't have its roots in a trading plan. There's no foundation of risk management in that one. So I would say you can probably help yourself significantly. If I'm wrong, email me, let me know. By saying, here's how much I'm going to risk per trade maximum, no matter what, and stick to that stop loss. And that should not have as much of a damaging psychologically effect on you.
Absolutely, absolutely. In fact, I would add a little bit to that by saying that what you want to do in that process is first identify, as Merlin just said, that it's going to happen, and acclimate yourself and use good risk management and appropriate risk management techniques. Secondly, as you are focused on, you're focused on it manifesting the way that you thought it would. But as it goes down and if it hits you, then to let it go. See, the street, what people do is they start perseverating, going over and over again about, I should have won this. And that should have been my money. Or why does it always, what is going on? And I should be better. Well, no, you shouldn't. Based upon the conditions and circumstances present in your life, you have followed just the right amount of charts. You have looked at just the right amount of different cycles, and you have analyzed enough trades, just enough to crash and burn. That's a reflection of where you are at that time. It's not a value judgment. We've all been there.
Yep. Every one of us.
Yeah, it's valuable data, and data is priceless. So when you get in that situation, there's 3 things I want you guys to do. First is accept it. Now, a lot of people say, what are you talking about? I don't want to condone, but no, that's not the acceptance we're talking about. What we mean is recognizing that it has happened, recognizing it, not being on the river down in denial. You don't want that. You want to resonate with reality. When things happen, accept it immediately, and let that be what it is. Because until you accept it, you cannot address it. Now, once you accept it, the next thing to do is learn from it. You have to always, that's why I said, when somebody loses something, and if they're losing for a long period of time, they need to adjust something in their training, something in their, because it may not all be psychology,
right?
But they've got to find out what it is. So learn from it. And take as much time as you need to take to learn from it. And the third thing, one of the most important, is when you've done that, move on.
Yeah.
You don't want to stay in that rut of severing and ruminating and gnashing of teeth. In fact, I saw a guy actually beat himself upside the head when he got really frustrated with his lack of attention to detail and his lack of discipline. Don't be that guy.
No.
Don't be just, let it go, move on.
Yeah, you start to get, one second, I'm trying to get the name for a question here, but you start to, beat yourself up over these things. It's not worth it. To me, the only time that you should not beat yourself up, but be very critical and almost I guess, mentally abusive to yourself, which is what I am to myself. Like, if I have a real bad losing trade, I am mentally abusive. I'm like, you freaking idiot. How stupid can you be, man? You've been doing this for X amount of years, and you still made this stupid-ass mistake. Shame on you, man. You know what? No trading tomorrow. You're 2 days off. You're grounded. And it sounds weird, but remember, you're your own boss. in this case, you are the CEO of it. So you have to draw the line, and you have to fire an employee if you need to, right? In this case, I got to fire myself from trading that day.
Okay. Well, my good friend Merlin, I got to have a pushback on it. I am not a fan of self-flagellation.
That's okay.
Now,
Okay.
I understand why you do it because you want to you want to expand this point of pain because you want to remember it next time. But if that worked so well, then it would have worked a long time. What I and if that works, but if that works for you, I'm not saying that you got to do what you got to do. But in my mind, it's about being compassionate and actually doing the work it takes to understand what you did, and then place additional where you need to place additional tools in that mark in order for you to do better next time.
Yeah.
Because see, when you flagellate yourself, you not only are putting it in a context that is punishment oriented, which is an away from filter. The filters that work best, in my experience, are towards filters. So towards filters are looking at things from a standpoint of what do I want and how am I going to get it. And away from filter is looking at how's this thing going to hurt me and how do I get away from it. Now, the away from filter can work. I'm not saying it doesn't work, and I'm not saying that what Merlin said doesn't work. My pushback is about how it tends to affect our follow through and affect our ability to remain focused and to do what's in our best interest. It just
Yeah,
it doesn't
and
work.
I think that there's different capacities for it. So I know that when I am abusive like that towards myself, it's just because I know I'm better than that. I have the track record to prove it. So when I make a violation, I know it won't work for me to be like, oh, it's okay, you did good, but you need to do better. I'm like, you made a mistake. You cannot be doing these types of things. You've done it over here. So I think this is if you're weak, I mean, and if you have if you're very easily offended or something like that, or you take things personally, then yeah, I would definitely not beat yourself up over stuff because then you really put yourself in a corner. But I'm fine with it, and then I think that's important is to understand how you deal with criticism or efforts to change things. And in my case, I've got thick skin. I've been an instructor and trader for many years, so people try to piss me off all the time. It doesn't work.
Absolutely, Ron, you made a great point, and I think that's the distinction. And I don't think that it is using you idiot and whatnot. That's your choice. But the point that you made that's really relevant here, that's really a good one, is that you want to make a critical comment, and you can be compassionate for yourself and still be critical. So we're there. We see each other. I mean, we see eye to eye. But the point is, do something about it.
Right.
If it's what Merlin says or what I'm saying, do something about it. Don't continue to do the same thing over and over and expect a different result.
Right. Believable direction. I like this comment. It's pretty funny. He says, it made a difference for me when I started reporting to my wife my trading results. Great feedback when she would say, I thought you said you wouldn't do that. Gotta love passive aggressive, right? And again, I've done a couple of videos where we talk about the power of partnerships, and if you have a significant other or a partner, it's nice to bounce not only trading ideas, especially if they know what you're doing, but results off them. I think can be beneficial because you might get a different perspective of how to deal with the situation. And a lot of times I think people find themselves in a much deeper hole than they need to be because of their inability or unwillingness to ask for help or just communicate with somebody who may offer a solution to their problem.
Absolutely. The thing is to remember is that when we are examined, we tend to make a much better effort.
Mm-hmm.
The effort is because we don't want to embarrass ourselves. So yeah, have people look at your trades, have your wife look at your trades and things, or at least you have a deal where you share them with her, and she asks you questions about it. it holds you account. It helps to hold you accountable because in the final analysis, you always have to hold yourself accountable.
Absolutely.
And even if you had these different things like put yourself out there and put yourself on the stage, there's ways to get around that too if you really want to badly. But the point is to be really purposeful about how you do what you do, so that you show up as the woman or the man that you really want to and be emblematic of, and not the also.
Let me go. Let's go through one last one here quick because I know we're running out of we're getting near the end of time for our show here. But this is from Casey, and Casey, you actually sent in a few. I'm just going to read this one because we'll tackle this one and maybe I'll get to the others later on. He says, I always feel that my strategy is not quote unquote ready yet, and I keep prolonging using real money. When is it a good idea to trade with real money? That's from Casey.
Right now.
Yeah, done. I agree. Just do it.
Just do it. Just jump in the water. Don't put your toe in it. Just jump in the freaking water. Now, that doesn't mean that you're going to put your life savings on the line of the trade. What it means is that you're going to do a micro trade, either Forex or they got micro futures now, things like that. So take a really small amount with a really small risk, but do it. You got skin in the game at that point. You're going to be really riveted on what's in, at least ostensibly, you're going to be riveted on what's important.
Right.
Hopefully, you're not looking at making the money. And like I've already shared with you, let the profit go. In any particular trade, you are concerned about your process. But that's what you got to do. You got to jump in the water.
Agreed. Yeah, I couldn't agree more. You know, Casey, you just got to do it. You know, you can practice swimming on the seashore as long as you possibly can, but until you actually get in water, you have no idea what that water is like. So you can trade right now one share of a stock. Just go find some $30 stock that you're comfortable with. Buy one share. Remember, it's not about the money. You say you feel your strategy is not ready yet. Get it working. Get some real money on the line and see how it works. And here's the other thing. The longer you wait to get your strategy quote unquote perfect, the more likely that the market will have already changed and your strategy will no longer work in that environment. So, you know, you got to get out there and do it. And once you are in that water, in the market, so to speak, you'll find that the currents are going to take you different directions. The water will change. The market dynamics, I mean, they're changing right now, in my opinion, and we're seeing much more bearishness come in the marketplace. The down moves are faster, so strategies need to be modified. But yeah, get out there and just do it, but with very, very small share size until you're comfortable. And there was a comment that came through earlier. I think it was from Sunny. Yeah, Sunny Yoshi says, trade smaller, got to earn the bigger position size. When you start off, forget about money. Forget about it. It has nothing to do with making money. My personal belief is trading has nothing to do with making money. Trading has everything to do with not losing it. So if you're in a trade and you're worried about how much money you're going to make, you're probably going to end up losing it. It's kind of like crossing the streets in London. Most people look the wrong way and they get destroyed and killed by a car. In the financial markets, if you're not focused on how much you're going to lose, then you're going to get destroyed. And most people start by focusing on how much money they're going to make, and they end up going broke and blow their accounts, and next thing you know, they're just a statistic. So start small. Start small. Keep your losses tight. Work on your plan. And when you get comfortable, go from 1 share to 2 shares or to 10 shares or to 100, whatever you're comfortable with, but progressively get better and better and better.
Exactly. And the thing is, you've got to always, and we said this a couple of times, but you can't say this enough. You must have solid risk management
100%.
strategies. Got to.
Absolutely. Without it, you're doomed.
Warren Buffett has said, and he's a pretty good guy to follow. Warren said that there's 2 rules in trading. First rule, don't lose money. Second rule, don't forget rule number 1.
Right. Love that one. Doc, tell me a little bit about what you got working at. You're always doing something. So I know you can find out more information about Dr. Woody Johnson. I have it at woodyswisdom.com. He's got all kinds of coaching and trading psychology. There's one stop for you. That's woodyswisdom.com. We've got his book, which was written several years ago, called From Pain to Profit, Secrets of the Peak Performance Trader. You can get that one on Amazon. And if I'm not mistaken, a little birdie told me that there might be a new book coming out.
Yeah. I've got most of it in terms of the first draft ready. And so I've got some rewrites starting as soon as I can get this first draft ready, which should be in couple of months,
Awesome.
hopefully anyway. And I don't have a title for it, but I imagine it's going to be out around the first of next year. We know when it's fully done.
Do we get a hint of what's the topic? What's it about?
Yeah, it's about principles and having a solid purpose for your trading, and it's going off in several tangents from that, and it's kind of using the wisdom of the ages to apply some of that wisdom to today.
All right.
Now the other thing that we're doing is that we at the dailymarketforecast.com we have a home study course that we put together. We did 18 hours of instruction, and you can get all of this for a very reasonable price. Now, along with that, you will get an e-version of the Pain and Profit book. We'll send that to you in a link, and you get that right away. So you not only have this vast amount of information that Mike and I put together, and we went through all of this live, but of course it's recorded at home. So you get the whole home study course, and you can do it at your leisure, in the privacy of your own home or office. And on top of that, get an e-version of my first book. So
nice.
We think that's a pretty good deal.
I think it's a heck of a deal. Heck of a deal, Doc. Well, I'm looking forward to your new book. If I can help in any way, let me know. I was like reviewing your stuff, but when you have the rollout, let us know. Maybe I'll buy a couple copies to do as giveaways on the show for the viewers. I'm sure they'd love that.
Fantastic. Oh, by the way, one more thing. We've got a webinar coming up on Monday on FX Street.
At FX Street?
FX Street, yeah. I do webinars once a month for them. I also provide blogs for them. And one of the blogs, in fact, you alluded to this topic, and it's a great topic when you've got somebody that is helping you hold yourself accountable. That's having a mastermind.
Yep.
There's a blog coming out. I just wrote it not too long ago about the power of community and how it can really serve as a way to help you help yourself in terms of being disciplined.
Nice. Well, I'll tell you, he's got a ton of different ways to stay in touch with him. You can go to woodyswisdom.com. You've got thedailymarketforecast.com for psychology courses. You can go to Amazon and get his book, and hopefully we'll get that new book rolling out here soon. And he's doing a webinar for FX Street, right?
Right.
Okay. So sometimes I can mix it with FX Street. Cool, Doc. Well, hey, man, thank you so much for coming on. I know it's been way too long. Hopefully we'll get you on with a little bit more regularity, because there's always...
It's a pleasure, my brother.
What's that?
It's such a pleasure. It's been such a pleasure. I always have fun.
It is. I'll tell you what, let me know next time you're down here in Southern California. I'm putting together a new studio so I can actually do it in my home, not at the office, but I can do it from my house, so maybe we'll do a live show. I'll get you on camera one of these days.
Great. That'd be great. I'd love to do that.
Awesome. Hey, well, take care, my friend. Thank you so much for coming on. I always appreciate it, and I'll talk to you soon.
Thanks for having me, brother. Take care. See you later.
All right, everybody, back to the Red Planet. Thanks, Chris, for the fun. I'll tell you what happened. So here's why I have this issue today. I have this new set of lights. I have a new array in the office, and I moved upstairs, which has open windows here. And apparently, every time you turn this computer off or walk away from it, this camera resets. So because it's sunny here in SoCal today, the front lights were really bright. So when I turned these ones on, I was washed out. So I turned it off, and now I look like I'm on Elon Musk's trip to Mars. I'm all red. So I will dial that one in. Thank you so much for the $5 for the camera. I appreciate that. Trivia question for you, guys. This is stupid stuff, but I love trivia. Why is Mars red? Seeing as how I look like I'm on Mars today. Why is Mars red? Just type in the chat. Curious to see what you think. And anyway, thank you, Dr. Woody. He's been, a good friend of mine for many, many years, and he's just so systematic about the processes to get your mind thinking in the right way. He came up with a it's not that he came up with it, but he uses this maybe it's a mantra, which is T plus E plus B equals R. And it's like, it's so simple, but thoughts plus emotions plus behavior equals results, period. Regardless of we're talking about trading or anything else, it's interesting to look at that, I get mantra or phrase or whatever you want to call it. I love it. I use it all the time in my day-to-day life. So, it could be the atmosphere, CO2. Exactly. Les is right. Leave it to the NASA guy. It's because it's basically oxidation of the iron ore that makes up a lot of the core of the planet. It's red because it's rust. It's rust. It's just weird to think about. I was watching some documentary on Mars last night, and I was like, rust? So we all have to get like serious tetanus shots when we go there? Okay, let me go to one more. And again, damn it, I have to leave today early, but you guys keep doing this to me. I got a question from, this is from Rob, who I think is in here. Rob says, yesterday at 5:02 p.m., I took a screenshot of GDX. I noticed the date and time on the screenshot, and I'll bring this up for you guys so you can see it. He sent me this one here, and you can see he sent this yesterday, which is really interesting. You can see you had it at 5:02 p.m. So this is as the markets were closed, 2 minutes after the closing bell. And it looks like you had this huge spike up yesterday. What's interesting is if you go out here and you look at today, you can see that it opened up and rallied up. So I'm at a loss. I gotta say, I am absolutely at a loss because you have a picture right here that you took on the 18th at 5:02 p.m. and it was showing that this was already trading at $32, right, in the after-hour session. However, if you look at the chart, you can see that it was not trading at 5 p.m. yesterday. All right, this is the 18th right here. So it's crazy to say this, Rob, but it looks like you have, I don't know, a data plan that tells you what the prices are in the future. So if you get this, send it to me again. Send me the price that it says that GDX is at tonight. Like, what is it saying right now? If it's showing that's at $40, I'll go buy this in the after-hours session because clearly this opened up this morning only at $31 and then just ripped. Had a great day for gold miners and metals, by the way. But just for everyone who would like to know, I did, by the way, I sold some covered calls on silver today. Since you have a pretty sizable position in silver, I sold the 2350s as my target there. Yeah, exactly, Lisa. He's got the crystal ball data plan. I want to know what it is because if it's telling you that something's up 7% the night before, I'd love to know that because I'll go all in on one or two trades and just call it a day. Be done. Interesting. Very, very interesting. I don't know why that is on that GDX. No clue. It just I seriously am at a loss because you can see it all happened today on the 19th, but that picture he's got is showing it on the 18th. Very, very odd, very bizarre, and it actually shows that it happened. It looks like after the market closed, but it didn't happen after the market closed. Photoshop. Oh, that would be could be. Let's see. Bob Dunn posted a tweet that a monthly close below 44.92 is a critical level. Do you agree with that level? And do we have to wait another 12 days? I do agree with that. I think that if you look at where the markets are right now, so let me bring up the S&P here real quick. You can see my levels. So we're ripping right towards that 44.95. Anything below 44.95, I think is a critical break. We were already seeing it. I mean, check out what happened to Russell today. Russell, it broke and closed below yesterday. We talked about that. We said it closed below that line, that 2100, which I thought was significant, and now we're getting follow through. If we start really picking up momentum, I mean, I've actually was kind of hoping we get a bounce so I could start shorting. But I do think you'll see more downside movement here. You had the NASDAQ as well. Okay, NASDAQ broke through some levels, and now, to me, it's going to be headed straight down to this 14.6 on the NASDAQ futures. Yeah, the Dow. Dow is certainly looking the best of all the four major market indexes, but all in all, it's looking pretty weak. And yeah, I think that S&P, that is a very critical level at 44.95 in my book. All right, let me go and show you a couple things that are happening. What do I got here? Here is this for today? Oh, I'm so confused. Yes, you had some good earnings today, but I want to go to the stuff for tomorrow. So here is what we have cooking for tomorrow. Yes, great. This is your data for tomorrow. Now, this is important because as you notice right at the top of your chart, you have something that's rather important, and this will lead to your popcorn trade of the day, meaning it is one of the more volatile securities that you're going to see, and that popcorn trade of the day is going to be Netflix. Netflix reporting earnings after market close tomorrow. So is Intuitive Surgical, American Airlines, CSX, and Union Pacific. American Airlines and Union Pacific are before market open, but keep your eye on Netflix. That's always a wild one. And then on your economic calendar, we got quite a few here as well. If you scroll down, you look right here, you got the Philly Fed Manufacturing Index. Remember, the Empire State Manufacturing Index came out negative yesterday. That was not good. You also have unemployment claims, existing home sales, natural gas storage, crude oil inventory. So should be a fairly wild day for markets and for commodities. If you have been paying attention and looking at things like natural gas, talk about it, just a crazy swing in price action over the past couple weeks. Natural gas is just all over the place. I mean, today you're down 5.8%. A couple days ago, you're down like 9%. And a few days before that, you're up 12%. I mean, just huge moves. So I say music. I actually said music right there. All right. I think that will do it. For tomorrow, by the way, if you want to know more information about anything we covered on the show, you have TraderMerlin@gmail.com as the email to send things to me, whether it's comments, questions, feedback. Again, we had a couple questions today, and I'll try to get to some of the other ones tomorrow for Casey, because Casey had like 6 questions all rolled into one, but I need to get out of here. I need to be on the road in 7 minutes, so I got to wrap things up. Tomorrow, we are going to have an interesting show. We are going to talk to Jeff Manson, who you guys have, one second. Jeff Manson, who we had on the show on Monday, he always does all kinds of stuff. So we are going to have Caitlin Akram on the program, and she's working with Jeff. They do their own program, their own mastery kind of school, but she's also someone who's come up through the ranks of education and kind of been learning very quickly. And you've been asking to have females on the show. Well, Caitlin is a young female as well, so we'll do that for tomorrow's show. If you have questions for Caitlin or myself, send them on in at TraderMerlin@gmail.com. That said, I hope you guys have a fantastic day. I hope that Dr. Woody Johnson helped point you in the right direction psychologically. Until then, happy trading, everybody. I will see you on Thursday. Take care.